Hello, and welcome to myfinanceteacher.org. Today, on the 22nd of March, we're going to talk about gold. We're going to mention the FOMC meeting as well as the US dollar. And in relation to FOMC meeting, the announcement from the Fed yesterday was very dovish. It looks like there will be no rate hikes this year. And on that news, we saw quite a nice pop up in gold price. You see a few news over here all talking about this positive reaction of gold price to dovish FOMC statement. Everything looks good so far. However, what I want to do in this video is to give you a word of caution. And let's talk about the reasons for that. First of all, I want to start looking at the US dollar index. And here's the daily chart of the US dollar. We know that the intermediate cycles, which for US dollar last well around half a year, sometimes they're considerably longer than that, consist of shorter daily cycles. It looks like within the current intermediate cycles, these daily cycles have been somewhat unusually short at about 1 month duration. Usually they're longer than that. The current daily cycle in US dollar has been going on for, I think, around 22 days or so. And what it means is that although it might still continue going down over the next, couple of weeks, let's say, or something like that, it will soon be due to give us some sort of a short-term cycle low and start a next daily cycle. Besides, if you look at RSI, this is a 10-day RSI, since we're looking at a relatively short-term movements, is not that far from oversold levels, also indicating that a bounce up in the US dollar might be coming up over the next, a couple of weeks or several days. Looking at this green candle, it might have even already started. And of course, generally a rising dollar is not that great for gold price. And now talking about the gold price itself, here's the daily chart of gold price. And since early March, gold has been doing pretty good. The price has increased from around 1280 all the way up to around 1320, and it stayed within this relatively narrow upward sloped channel. However, I think this channel might turn out to be a bear flag. And over the next few weeks, I'm afraid we might going to see lower lows, probably somewhere at around the 200-day moving average at the price level of around 1260. Why? You say, why I expect lower gold price? Well, for a few reasons. First of all, usually the intermediate cycles finish with the last daily shorter term cycle giving us a lower low. That sort of is the norm for declining phase of an intermediate cycle. That's why I expect a lower low below 1280. Now, moving on to the longer term weekly chart, another reason I expect a lower low on gold price is simply, a more pronounced handle for this cup and handle formation. If I see this more pronounced handle, it will just give me so much more confidence to enter some long positions in gold or gold miners with an expectation of significant move up. Remember that for a cup and handle formation, a measured move is the depth of the cup. If, let's say, roughly this depth is around $150, $160, adding that depth to this level of about 1350 gives us prices at about 1500. I understand it's kind of hard to believe that we're going to see gold at the price of 1500, possibly over the next several months, maybe September, October, because we've been in so much pain in gold price for many years already. But this is at least what the technical pattern is telling us at the moment. Of course, there are no guarantees, and we have to remember about that and be ready to change our strategy, get rid of some of the long positions if the trade is not working well. So we have to remember about risk management as well. In either case, looking at this slightly longer term chart, after a short term pull back down towards, probably 1260 or so, I still expect considerably higher gold prices. Once we start the next intermediate cycle in gold, say from around 1260, it will have a potential to reach this upper boundary of the ascending triangle relatively early within the next intermediate cycle, which means it will still have some potential left for a push upwards without the declining phase of that intermediate cycle coming into play yet. In either case, this is the most likely scenario for now, in my opinion, but remember, this is just an opinion, and we have to stay responsive to what the charts are actually showing us. For example, if I'm wrong with this upcoming decline over the next few weeks, if the price actually breaks above this recent high that was at about 1350, then that might indicate that we're done with this handle, and that also might indicate that we've had a very mild intermediate cycle low and a new advancing phase is already ongoing. But personally, I would like to see gold at about 1260, because now in my portfolio I only have around 4% or so allocated to gold and silver. I would like to allocate about 20% of my portfolio to GDX or something like that, given the chance, hopefully over the next few weeks. What do you guys think? Would you like to have a chance to load up on gold at 1260? Or are you now ready for a slingshot up to 1400? Let me know what you think in the comments below. Give a like to this video. I hope it's given you a lot of value. And hey, recently I've been trying to be a little bit more active on Twitter. Follow me on Twitter, that's myfinanceteacher, without the last letter R, because that username is apparently a little too long for Twitter. So that's myfinanceteacher without the last letter R. While I make these videos on YouTube probably around once or twice or 3 times a week, I will try my best to provide some sort of interesting information on Twitter every day. And that is all for now. Have a nice day and good luck with your trades.